$2 wants to charge. I know it only costs them, pennies for that cup of coffee they sell for $2, but hey, that's the market. Let the market sort all that out. But when it comes to the price of gasoline, obviously the reaction's much different. Let's go back to the phones, though. This is Walter. Walter, go ahead.
Oh, hi there, Rob. Yeah, I just wanted to talk to you about the oil prices.
Okay.
Your guest made a few good points, but I think he kind of missed the main driver of the price of oil. And in my opinion, I think that's inflation. And I think the central bank is printing a lot of money, and it's driving the cost of everything up. So when you measure oil to paper money is losing value, so oil has to adjust because they're printing more. And if you look at oil compared to silver, gold, copper, and you just mentioned coffee, in reality, oil's actually at record lows against a lot of those commodities. So oil, the price is just adjusting to all the new money they're printing out of thin air.
Well, yeah, that's an interesting point, and certainly that's the case in the U.S. especially. But again, it is global. It's still the price that the Chinese are buying it for.
It's not just our central bank or the U.S. central bank. It's all central banks are printing money like it's going out of style. Yeah. So if you measure oil against devaluating the base dollars, then the price is going to keep going up. But if you measure against real money like silver or gold, it's actually at record low prices. So, you can Google this yourself. You can just take a look at silver and gold prices or copper prices. Like at the turn of the century, oil was $19 a barrel, and gold was $230 an ounce. And if you track it the last 10 years, they basically in tandem. So it's not that oil prices are going up, it's that the value of our paper dollars are going down.
You're right. That does get overlooked. I think that's an important point, Walter. Appreciate the phone call. Yeah, you can't ignore that. Right? There's something to be said for that argument. And if we all had to buy gold every day, if our vehicles ran on gold, well, imagine how much we'd be freaking out. But so you can look at it in that sense. Where that commodity versus other commodities tells you another story. But the reality is we buy it in dollars. We're not showing up at the gas station with our bucket full of gold, right?